well, it's kind of an interesting footnote. The Federal Reserve has been tightening all year. They've raised their target rate by 4 full percentage points. The money supply, for folks that watch that, has come way down from high positive to slightly negative. But I'm not sure it's had any impact on either inflation or the economy or the jobs market, which was pretty strong. So we need a tutorial from my great friend Art Laffer, former Reagan economist and Presidential Medal of Freedom recipient and author of the new book, Taxes Have Consequences. By the way, Arthur, November 4th, which is today, is the 42nd anniversary of Ronald Reagan's election in 1980. Just saying.
Wow.
Yep.
Isn't that great?
Isn't that cool? There's a little picture.
Gee whiz, that was a thrilling day. What a great day that was. We weren't sure we were going to win, Larry, and then we won by a large amount.
Yeah, he won 51%, won a whole, I think, 44 states. So, Arthur, let's, the situation today is not exactly like it was way back then. But I'm interested in your thoughts. Today's job numbers were fine. I got my sheet, 261,000. I know the household number was down, but that is volatile, but maybe that's worth looking at. Wages rising, but not near as fast as the inflation rate. I mean, the point, I guess where I want to go is, it doesn't seem like the Fed's tightening has had very much impact on inflation or on the labor market, which the Fed likes to target. We don't, but they do. What is going on here? Is the Fed actions having any impact?
Well, I don't think they're having any impact yet on inflation. And when you look at it, it is having an impact on real wages, as you mentioned. Real wages are down. You also see that in the establishment report, Larry, that this increase, this month's increase, is the smallest increase in over 2 years. So, and that's in absolute as well as percentage terms. And then when you look at the household number was down 300 and some thousand, Larry. And, you know, it's not as good a number as the establishment, but it does include just employment. And the establishment also has things like people working 2 or 3 jobs will be double counted. So I don't think the labor market looks all that strong. I think the Fed is having an effect on the labor market and on the goods market, but not a dramatic one yet.
And, what did you make of what Jay Powell said earlier in the week, which we called it a word salad? I might have been too tough on him, but the fact he's saying we're going to keep tightening and the target rate is going to go higher than Wall Street thinks, but the incremental increases month after month might be a little smaller. I mean, does all that stuff make any sense to you?
Not really. Not really. What Paul Volcker did, and just again to repeat, is he allowed interest rates to hit their market levels. You know, whenever you have price controls, as Jay Powell is putting in there, by allowing this rate, controlling that rate, whenever you have that, you're going to cause dislocations in the market, which are happening all the time. He should just let that rate go, seek its level, and then start bringing it down, just the way Paul Volcker did. But once you fix rates, once you fix interest rates, then you're required to buy all the bonds that are yielded to you, supplied to you. And that's why the Fed balance sheet has increased so much, Larry, to $9 trillion from a little less than $1 trillion. And that is an enormous increase in the monetary base, as you know. And I don't think there's been any tightening of money whatsoever in the system. I think that monetary base is the key number to look at. And that's just been growing, and it's very, very large and way larger than would be necessary to accommodate a lot more inflation.
So taking this, just going on now, the first half of the year, we had, I would call it a mild recession. We had 2 straight quarters of negative GDP. The second half of the year, we're getting a modest increase. We had a 2.5%, 2.6, whatever, in the third quarter. Actually, the Atlanta Fed is looking at 3.5% in the fourth quarter. But my question is, can you have a double-dip recession? This is something former Reagan Fed Governor Bob Heller talked about on the show, I don't know, last summer, last spring. First half of the year, contraction. Second half of the year, small recovery. 2023 recession. Are we aiming here? Are we heading for a double-dip recession?
Yeah, you got a very weird recession in the first half of this year. You did have GDP down twice. That's true. That's the definition of it. But as you mentioned, we've had increases in employment throughout the whole time period there of that recession. And that is an unusual set of circumstances. Now, we're catching back up now where we have GDP growth, 2.5%, 3.5%, as the Atlanta Fed says. And we've got the employment numbers sort of corresponding to that type of GDP growth. But with this decline, if the Fed keeps going and not letting interest rates seek their own level, you could very well have an actual downturn next year, a downturn in both GDP and in total employment. The participation rate is the key number I look at, Larry, and that number is way, way, way too low for a healthy economy. That's where I think that the economy is really underperforming, is there are just not enough people willing to leave their homes and go to work. And that's because of the government spending programs.
Well, that's it. So that's my next question, last minute or so here. I'm going to make you king for a day. I know you're always king, but I'm going to especially make you king for a day. January 3rd, GOP takes the House and Senate. They actually take over. What's the first priority you would have?
I would do the legislation to undo the energy policies of the president and his administration. I would also do one to undo the damage done by the tax, by the increase in the funding of the IRS and the 87,000 new there. I would go through program by program in a separate piece of legislation on each one and put that bill to undo the Build Back Better baby bill, piece by piece by piece, to make sure that all the Dems vote against it or for it or whatever they're going to do, and then make Biden veto every one of those bills. That's what I would do. And I think we'd be quite successful on some of those, getting them removed. I mean, for example, the IRS. I can't imagine that bill passing by itself, that they really want 87,000 new IRS agents for $80 billion. I don't think anyone wants that. And I think we could get that passed by a veto-proof majority.
All right, I like it. I like it. Let's
repeal.
Let's take the handcuffs off of oil and gas. Let's start permitting and drilling and fracking, and let's get rid of the IRS.
Yes, sir.
Art Laffer on a Friday evening. Thank you so much.
Here's
all right.
Here's to a great next Tuesday.
Yes, sir. The cavalry's coming.